if you're going to get a rise in tariffs at the top of this credit bubble, I mean, this to me is, it's a doppelganger for 1929 to 1932.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 30th to July 6th, 2025, while supplies last. First this week, we feature backdated 1/10-ounce gold maples at just $45 over melt per coin. Next, 1-ounce silver Swiss Pamp rounds are just $2.59 over spot per ounce. 90% mixed junk constitutional silver is only 99 cents over spot. And finally, backdated 1-ounce platinum Platypus coins are just $119 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this distinguished returning guest, Alasdair Macleod, a former bank director, also a former head of research, is now his own Substack writer on Substack. We'll tell you more about that later, but we're going to invite Alasdair. Today is Wednesday, July 2nd, 2025. Alasdair, thank you for coming back on Liberty and Finance.
That's my pleasure.
You've written some interesting articles recently about turmoil in the UK, both economically and politically. Some of them mirror concerns that are happening right now in the U.S. The U.S. Trump and Elon Musk had famously been leading the charge for the first calendar quarter or so of Trump's term with very high profile and well touted finds of, oh, look at this glaring inefficiency here, and look at this wasted money there, and look how we're cutting millions and then billions, and isn't this wonderful? And now that's all dashed because Elon they parted company, and now this so-called big beautiful bill just got passed by the Senate yesterday and is expected to be heading to Trump's desk for signature this week, and it contains unbelievable amounts of what are absolutely, you would call, traditional pork barrel spending, $30 billion in subsidies for agriculture and benefits, Medicare, Medicaid, and other benefits for illegal immigrants, and all kinds of things that were supposed to be, and not necessarily continuation of those types of cuts that the Department of Government Efficiency, or DOGE, had been making. So many who really want fiscal responsibility from our new regime that went in with that mandate are feeling betrayed. Others, not so much. But it's a difficult time in the U.S. as well. And you were writing recently about a experience in the U.K. of turmoil about both economic and political. Can you tell us what's going on there? Because I think there are some distinct parallels happening on your side of the pond.
Yeah. Well, there are parallels. I mean, the parallels basically are unsustainable debt. The difference is that your political class don't seem to realize it, whereas ours have woken up to it. We have a Treasury here, a Treasury Department, who places great emphasis on balancing the budget. And it didn't take very long for them to persuade the current Chancellor, Rachel Reeves, that she must balance the budget. So what did she do? She raised taxes and raised them in such a way that satisfied her socialist and trade union audience. So, and at the same time, she also raised government spending, particularly on salaries, doctor salaries, public sector servants' salaries, salaries for railway workers, and so on and so forth. So she increased taxes, perhaps she thought slightly faster than she was increasing the costs. And as it turns out, actually what's happened is that the costs are rising faster than she raised the taxes. The way she raised the taxes basically has also backfired, because what she did was she chased away the big taxpayers. I mean, we have a very unbalanced situation here. The top 1% of taxpayers pay 30% of the income tax. I mean, so if you upset the high earners and they leave, then you're going to have a big hole in the income tax returns. And that's precisely what she's done. People have been leaving the country. They go off to Dubai, they go off to Italy, they go, anyone who'll offer a better tax deal, thank you very much. Goodbye. And there's basically the problem with socialism, this form of socialism, is we just hope the last person to leave the country will remember to turn off the lights. That is, if there's any electricity, because that's the other thing they're doing. They're basically messing up the energy supply situation under the guise of this, climate change thing. Because, the minister involved, Miliband, is very far left. And the one thing that we can, I think, pretty well demonstrate is that it's the very far left who are the keenest to clamp down on fossil fuels. I think they see, the oil industry as being evil, if you like, evil capitalists. And they really do want to clamp down on it. And they basically want to kill capitalism, let's face it. So you've got this sort of extraordinary situation of a government which started off pursuing its, sort of pet hates, like sort of wealth and all the rest of it. The bourgeoisie. I mean, it's just a step away from extreme communism, this lot. And it's all now going wrong. So what happened is that in the last few weeks, the government has sort of realized the error, has been pointed out to it in no uncertain terms, and then decided to try and cut the benefits bill. And the problem they have in doing that is that Labour MPs are elected basically to promote welfare. That's their USP. So unsurprisingly, there was a huge, great revolt, so much so that the government has had to back down completely on any welfare cuts. Now, that gives a political problem because of, the credibility of the government and the credibility of the Chancellor in particular, and there's talk about she's going to have to resign and so on and so forth. And indeed, today we saw gilt yields, the version of our government bonds, rising quite sharply, and at the same time sterling falling. So this is quite a serious issue. But the interesting thing is that it's an issue for all welfare-driven economies. It's not just us, it's all the other members of the G7. I think probably apart from America. I mean, the US is pursuing a slightly different course. You have a president who's got his spending priorities. They're not necessarily, sort of welfare related, but my goodness, he wants basically to replace income tax, corporation tax with tariffs, and it's a policy which is just falling apart. So now, having said that, there are going to be agreements which are due. The agreements with all trading nations are due to be settled, I think, on the 8th this month, which is Monday or thereabouts. I mean, later on this week, early next week. We'll see how that comes out. But, if you're going to get a rise in tariffs at the top of this credit bubble, I mean, this, to me, is, it's a doppelganger for 1929 to 1932, which is not good. It really is not good. And so I think that's the sort of the second crisis, if you like, the crisis in the wings, waiting, which is going to be very, very difficult to handle. So, the interesting thing about this, DK, is that, of course, so far there's been a flight generating out of the dollar going into the other currencies. I mean, just look at the chart for the dollar's trade weighted. It is awful. I mean, there's no other description for it. The dollar has fallen against all the other major currencies very substantially. And if you look at the other major currencies, the only reason they are where they are is because of the dollar's weakness. But the contradictions within those countries in terms of their own government finances and levels of government debt are not too dissimilar from the problems that are faced in America, as to your point. It's a slightly different story, but, same end result. So it's hardly surprising that through all this, in these very, very quiet summer months, when really, I mean, I see this on my substack, basically nobody's doing anything. The comments in the comment sections are sort of quietened down and so on. Nobody's interested in anything. So nothing is being priced. But gold has been holding up quite well under these circumstances. Silver even better, perhaps. At a time when you would think with things being so quiet, it would be an ideal opportunity for the shorts on COMEX or in the forward market in London to basically bash the prices and shake out a bit of loose stock. But that's not happening. So, which I think tells me there's no loose stock. But when things begin to get a bit more interesting, when people stop, come in off the beach and start sort of thinking about things a bit, I think there could be a few shocks in store. So, yeah, it's an interesting moment.
What you're describing, the strain, the fiscal monetary strain between a country that is deeply in debt, doesn't have a balanced budget, has a huge entitlement expectation on the part of its people, thinking that all of the benefits that they've become accustomed to or were promised by the incoming regime are likely to be taken away if the regime says, hey, we can't afford this, we're going to raise taxes and cut benefits. This is going to be, I'd like to hear what your thoughts are about this, but it seems to me this is unavoidably, due to mathematics and history that has led us this far, a very common theme across many countries. You said the entire G7. What do you see as likely outcomes of this crisis, this across all of these countries who have overspent, overdebted, overtaxed, and overpromised, and you've got an aging population that's going to be, exiting the workforce and expecting their pensions, et cetera. What do you see as some of the most likely outcome possibilities that we should be expecting on all these countries?
Well, I think the thing that's common to all is that economies are struggling. I mean, they really are. And with all this government debt on top of it, if you get a recession, a contraction of particularly activity in the private sector, then the ability to pay the interest on the debt will be compromised. And I think that this whole situation has been made worse by President Trump's tariffs. I mean, the people who deny this are basically the Republican supporters of Trump, but everybody else realizes that, this is just not good. And as economies decline, of course, what does that do to government finances? If you've got a budget deficit of 6.5%, 7%, as you have in America, going up to whatever, just purely on the basis of a big, beautiful bill, then you could be very quickly looking at 10% budget deficit because, the underlying economy is in trouble. In our case, our budget deficit is a bit over 2%. Now you think, oh my God, that's not bad at all. But that could, again, very rapidly start deteriorating. If the tax income from the private sector starts declining, and it's pretty sure it will. I mean, we're seeing a huge great loss of confidence developing across all sectors in the economy here. And the thing that's interesting to me is that, I mean, you look at your government statistics and no cause for alarm. I mean, everything's sort of, something comes out that say 0.1% more or 0.1% less of what the market consensus is, and everybody gets terribly excited for 5 minutes, and then we forget about it. But, when you got the University of Michigan looking at the, confidence numbers, you can see that this is not good. And not only that, but I mean, they recently did an analysis which was really quite pessimistic. And guess what? When your GDP numbers came out, I think it was for the first quarter, they were considerably worse than forecast. This sentiment actually is a lot more important than the government statistics, which are basically lies to ensure that the market doesn't get upset. So I think as to your question, the situation is deteriorating. It's deteriorating in terms of potential tax revenue for governments. They are already in deficits. They already have very large levels of overhanging debt, which has to be funded, financed. And remember, the interest is never actually paid on this. What happens is it's rolled up into new debt. So this is a situation where the markets are going to turn around and say, well, what interest rate should we take? What should we take? What's the right level of interest on this risky debt? And the answer basically is somewhat higher than where we are at the moment. But the tragedy in that is the higher interest rates go, the worse the position becomes. Not to mention the debt position in the private sector, because I mean, there are large elements of the private sector took the advantage of very, very low interest rates over COVID and the run up to COVID before, the consequence on prices started hitting markets. And they're now, debt zombies. And every day you find that they can't refinance at anything less than, say, 5% or something like that. These zombies are just dying. And that is going to become an increasing factor, I think, by the end of this year. So the outlook just is not good. It really isn't. So where do you go? I mean, all this stuff is credit. The only place to go really is physical metals, which are, in terms of precious metals, are gold and to a lesser extent, silver.
One of the unacknowledged or unspoken truths in what you just laid out is also how much of that, I think you intimated it a moment ago, is how much of the existing apparent or officially reported economic activity was actually just stimulation or attempts to stimulate by the government spending. It's not real organic private economy activity. And that combines with the fact that when you have the wealthiest people leaving the country and you have many of your industries and your companies unable to carry their debt load and refinance them at higher levels, as you referred to as zombie companies, it's just this combination of multiple factors, besides the fact that the actual economy, the real economy, was never that as robust as the government statistics, headline statistics made it appear, because those are influenced by the government's fudging the numbers by just creating debt-based false activity. Can you emphasize that? Just help everyone understand how much of the economic activity that we've been told is actually going on is really just a manifestation of government debting rather than actual real physical economy activity.
Yeah. The bulk of government spending is hard to separate out in terms of whether it is productive or whatever. I mean, because take, for example, Medicaid, or in our case, the National Health Service. Now, this is a service which obviously people would pay for if the government didn't provide it. So you can't say that this is just a complete total waste of money, if you like, in the sense of providing something that consumers actually want. The problem is that what governments do is they provide things which consumers want, but not necessarily in the way in which consumers really want them. And they do it very inefficiently as well. The easiest thing to separate out really in terms of distortion is the budget deficit. Because if you take the deficit, in the case of the United States, you're looking around about 6.5%, 7%. In our case, it's about 2%. All that spending effectively goes into the GDP statistic. So what you should do is you should take that out of the GDP statistic in order to get some sort of view as to what the nominal GDP situation is for the private sector. And when you've got GDP, say, growing at 4% nominally, and you've got government spending running at, government deficit running at 6%, then obviously you're looking at a contraction of minus 2%. Now, there is a caveat here, and that is that GDP actually is not a measure of economic progress or regression. It really is not. All it tells you is how much credit has been deployed in the economy over the period, usually a year or annualized into a year. And that basically means that for some time now, most Western economies have been in recession. Once you take out this excess spending, unfunded spending element, as it were, from the economy. And then, of course, you've got the consequences on prices. And here the governments used various tricks to ensure that the level of increase in prices, the consumer price index, is actually controlled. It went out of control following COVID lockdowns after a brief pause, which led to higher interest rates. But really, the whole of the inflation situation is just complete mess. I mean, you talk to John Williams, he would say inflation's been running at a figure, well, it's probably closer to 10% or something like that, when the government has been reporting 2 or 3%. It basically makes a mess of all government statistics. And I look forward to the day when markets actually just ignore them completely, because there really is no point in listening to anything the government statisticians say, because we know it's wrong. Why do we act as if we think it's right? It isn't. It's complete rubbish. Sooner or later, I think, our international creditors are going to sort of wake up to this and think, well, this is actually a load of rubbish and we ought to just get the hell out. It's just complete nonsense. Absolute nonsense.
I have to share a quote by Alexander Solzhenitsyn on this. He says, quote, and for those who don't know, he was a famous Russian dissident of the 1980s who got in hot water with the Soviet regime by writing the books that got people to really be able to talk about what was really going on there. He says, we know that they are lying. They know that they are lying. They even know that we know they're lying. We also know that they know we know they're lying too. They, of course, know that we certainly know that they know that we know that they are lying too as well, but they are still lying. In our country, the lie has become not just moral category, but the pillar industry of this country. Any further comment on that?
Well, I think that's it's a good quote, and particularly in the sense that it was on the basis of those lies that the Soviet Union existed for a very, very long time. And not only that, but the lies from the Soviet Union were so convincing that Western intelligence agencies thought actually the Russian economy was a lot stronger than it was. They bought it as well. Yet, any idiot going into Moscow in those days would see the supermarket shelves completely emptied. There is actually a funny story about that, because at about that time, the propaganda machine, the USSR propaganda machine, decided to have a go at Margaret Thatcher. And they called her the Iron Lady. The idea was to make her appear absolutely callous and ruthless when it came to the poor and all the rest, the Iron Lady. Anyway, that was wonderful. She adopted that quite readily, so that backfired. The other thing they did was they produced a propaganda film showing the waste in British supermarkets. They filmed these shelves absolutely stocked up with all sorts of things and just a few people wandering around. This was obviously a complete waste, terrible. But of course it backfired, because the poor people in Moscow would go into a supermarket and find absolutely nothing in the shelves. And suddenly said, come on, we want to go to Britain. This is what we need. But the lie basically started breaking down at that point. And I can't wait for it to break down here, actually, because this is, it's just so obvious. People are such idiots in believing this stuff. But when you bear in mind that before the collapse of the Soviet Union, before all these lies suddenly were realized to be lies, Western intelligence agencies thought actually the Russian or the Soviet economy was in a good position. It was looking strong, honestly.
It's hard to separate what the Western intelligence agencies actually thought versus what they presented as what they believed in order to help get the right support of the American people.
I would accept that point, but they genuinely thought that the Russian economy was a lot stronger than it was. I mean, they were just idiots. I mean, one of the idiots just fooled by the propaganda.
Well, there's two aspects here. One is we talked with Daniel McAdams from the Ron Paul Institute for Peace and Prosperity, and he said that even in the 1960s, let alone in the 70s, 80s, and beyond, there were CIA or other intelligence department operatives in every major media outlet in the United States. He said if people understood in the current era that the media in the U.S. is as or more controlled than the Soviet era media was in Russia, they would have a better picture of what's really going on. And the second point I wanted to make about that is that when we tell these stories about Alexander Solzhenitsyn and Soviet Russia, we all wag our heads and cluck our tongues and think, oh boy, lucky we don't live in that horrible communist mess over there. And yet you're telling us this is now modus operandi for the G7. Am I missing that? Or is that what you're saying?
Yeah, absolutely right. All governments lie. I go back to one of my favorite quotes from, almost 200 years ago, when Lord Canning was Prime Minister of this country in 1827. I think it was probably just a little bit before he was Prime Minister. He came up with a wonderful quote: "I can prove anything with statistics except the truth." And it's even more true now. I mean, we've got all these computers, sort of churning out numbers and all the rest of it. And you'd think that they were better, if you like, or more accurate. They're not at all. I mean, they're just all manipulated. I mean, I had a fascinating thing. That we've got this current fashion for artificial intelligence. Everything is done by AI. And when you sort of search something on Google, you now get an AI thing, sort of, summary out there. Well, I came across a reference to a podcast I'd done, a fairly short one actually, for some Australian friends. And it said that Alasdair Macleod said that gold was likely to go to $1,701 or something like that. Because of not what I said. I was refuting someone else's statement that would be the case if it was to cover all the outstanding dollars and all the rest of it. It was the complete opposite of what I said. And this is actually a very severe warning, I think, for everybody. You think AI is going to, tell the truth. No, it's rubbish in, rubbish out. I mean, it's actually as simple as that. None of this is any good at all. Just be very skeptical of anything anyone tells you. Perhaps even be skeptical of what I tell you. You ought to, do your own research.
Yeah, it is absolutely a thing that just happened. A page just turned in the past 3 to 6 months where you used to do an internet search. Actually, about 5 years ago, you would do an internet search and you would get pages and pages and pages of results, and you could skim down and find a wide variety of responses. Then over the past 4 to 5 years, during this global lockdowns and all that came with it, it was remarkably noteworthy that when you did a search on a particular topic, especially if it was one contrary to the dominant narrative that the mainstream media were promoting, you would see that the first several pages of results were all directly on the opposite side of whatever it is you were asking about, or they all had the same story. And sometimes the wording, even though there was this illusion of diversity, it's been called, where there was many different sources. So you're trying to triangulate from considering different sources, but they're all saying exactly the same thing in exactly the same way. And then more recently now, just in the past 3 to 6 months, you don't even get to go look at hundreds and hundreds and hundreds of results. You get an AI summary. This is like, don't bother looking elsewhere. I'll just tell you what it all means. Your trusted assistant will tell you. And I've observed that a good percentage, a healthy, concerning percentage of the time, the conclusion is precisely wrong. If it's this subject that I know about, be very, very careful because it often gets it wrong. Whether that's intentional or whether that's just shows the immaturity of the capability, that's not for me to say, but it's certainly not trustworthy. That how much I'll say.
I think that's right, but I mean, I think it's because of the sources. I mean, you've got this sort of incredible amount of information, and you sort of tap into your thing, what information or and it just goes around billions and billions of sources of information, collects it all together, and comes up with an average, if you like, and that's the sort of response that you get. And because our sciences, I mean, our natural sciences in particular, like economics, I guess psychology as well, but also sciences like climate change and things like that. Because so much of the information is completely wrong, then that is reflected in the final result. And there you are, you're thinking you've got a very clever Google thing or whatever, artificial, I was about to say artificial insemination was probably a better description of it. But artificial intelligence, really, it's the old story, rubbish in, rubbish out. And unfortunately, what it does, I've also noticed this in scientific journals too. Too often, people writing articles or essays or bits of research quote other research. And you have to do that in order to have credibility for your scientific work. But that other research isn't necessarily correct. But as long as you cite it, it gives your piece credibility. Now, this to me is entirely wrong, and it's actually goes completely against the Austrian economics approach, if you like, of a priori argument. You have to sort of argue things, if you like, in a logical way, rather than rely on someone else's information. And I mean, we've got to get back to that, I think, in all these sciences, because they become, otherwise these sciences are becoming completely meaningless.
I've heard the metaphor made that it's like mad cow disease. I don't know if that's what it was called in Britain.
Yes,
okay. So the underlying root cause of this horrible malady that could affect not only cows but those who consume them was that they were feeding previous generations of the cows, especially their nervous system, brains and spinal cords, etc., to the next generation, which is not natural. If you think about it, unless you're a zombie cow, a brain-eating zombie cow, it's not natural for you to eat other cows. And yet that's what was being fed to them in their feed, just as an efficiency to save money, whatever. But it's said, this is the analogy was made, that the internet and AI in particular has become like that. It's feeding upon itself and becoming crazier and crazier and crazier as a mad cow does by eating something, by consuming, as you say, garbage in. It's just it's as we have in nature with mercury or other toxins that are accumulated by the little fish, and little fish are eaten by the bigger fish, and it gets bioconcentrated. It's just quintessentially concentrating the distortions or the narratives of the garbage.
Indeed.
Okay, now you've recently written about whether gold and silver has found footing or some support in the current levels. We'd like to get your read on that before we move on to talking about articles you've just recently written about whether Bitcoin should be considered money or not. So first of all, do you believe that gold and silver at current levels are finding some support that's recognized, that's demonstrating some support at these levels, or that we're still at a frothy top on both of them?
Well, I don't think there've ever really been a frothy top. I mean, there was a very brief moment when you could say that silver was a frothy top. Got up to what, sort of 37-ish, something like that. I mean, but really the reaction has been very, very minor from that frothy top. And the same with gold. I mean, gold sort of spiked up early one morning to 3,500, but it's just been moving sideways. And in these, as I was saying earlier, in these very quiet trading conditions, you would expect it to drift lower. I mean, I talk, if you like, as an ex-stockbroker. And, I knew that in the case of any stock, and it's the same has got to be true of commodities, in the absence of buyers, prices go down. Now, here we are with gold, close to all-time highs. You've got no interest in the market. I mean, really very little in retail interest, that is for sure, because everybody's just out there enjoying the weather. Or, and this is what I found as a stockbroker in the UK, I mean, it was so frustrating the summer months, because there was I on the floor of the stock exchange or in my office trying to contact clients to find that my competitors had taken them out to Ascot, Henley, all the sporting facilities. I couldn't get onto anyone and get them to deal because they were already being, wined and dined by my competitors. So it's the same thing now. Nobody's interested. And you would think gold and silver would drift off, but no, they're not. And I think part of the reason is the weakness in the dollar. I think you've got to look at the dollar from the foreigner's point of view, always. They own, in terms of dollars and underlying financial assets, including about, I suppose, 7.5 to 8, or no, it's about 7 trillion of bank deposits, figure like that. Total is just under 40 trillion, of which I think about 14.5 is in equities. I mean, this is a lot of stuff to be sitting on when the dollar's going down. And the dollar from President Trump's if you like, Liberation Day on April the 2nd, dollar's lost well over 10%. So where have you made up the currency loss on your underlying investments? Well, the answer is you basically haven't. You might have done a little bit, I suppose, if you'd sort of continued to invest in NASDAQ type stocks, the Magnificent Seven, because they've performed reasonably well. But you're buying into hot air. I mean, come on. It's, the idea that these stocks are value, if you like, that's just nonsense. If I was a foreigner, I would be, I'd really be reducing my positions, particularly when you get President Trump turning around and saying, the dollar should be lower. Okay, well, if it's going to go lower, that's not going to do me any good. And also President Trump turning around and slagging off Jay Powell. I mean, you begin to think, well, who's running things here? Right? Slagging off Jay Powell is actually a very bad thing to do. I'm not saying that I think Jay Powell is necessarily the most wonderful human on the planet. But, if you want stability in a currency, the last thing you do is start slagging off the guy who's actually running the most important institution providing that stability. He's doing the job to the best of his ability. And I would say he's actually been doing quite a good job, given if you like, the misconceptions that are around, Fed economists, because he's got to reflect the consensus, I guess. But I think he has actually been doing quite a good job. And to have a president turning around and saying, I'm going to sack this man as soon as I can, and all the rest of it. If I'm a foreigner owning dollars, I don't think I want to own dollars anymore. And the point is, there's 40 trillion of these dollars held by foreigners like me. Why hold them? And particularly, I mean, if you're, let's say, a trading business as opposed to an investor, you hold dollars for international liquidity. I mean, you've got to go out and you've got to buy commodities and all the rest of it, and you get payments, and you're going to end up with some liquidity. You've got to have liquidity. But now that the global economy is turning down, and even though governments aren't admitting it, you probably see it in your own trade, seeing what's going on with shipping and all the rest of it. You got too many dollars. Sell them. It doesn't make any sense holding on to them. The problem is, what do you sell them for? Well, if you're a foreigner, and let's say you're, say a German manufacturer like BMW or Mercedes or someone like that, then you account in euros. So anything out of euros becomes, if you like, a risk, a profit risk. So what you do is you may not like euros, but basically you've got to sell your foreign currencies and go back into euros. And that basically, I think, is what the dollar is suffering from at the moment. I mean, particularly euros, yen also, but I think probably to a slightly lesser extent than euros. And when it comes to sterling, it hasn't really started in sterling yet. I really don't think it has. Well, that could be the next shoe to drop, I must say. Selling sterling for exactly the same reason, because sterling is overowned. And it's overowned because London is the international financial center in the European time zone. Banks and institutions and all the rest of it have sterling. And I can't see for the life of me why they should. So that, I think, currency problems are going to be continuing, and I think they are probably still mounting. And under those circumstances, I really can't see any meaningful selling of gold or silver. And I would have thought that, if anything, gold and silver represent really pretty good bolt holes for those getting out of these risky currencies.
You also wrote an article just recently about whether you assess Bitcoin to be true money, or can it qualify as money according to the classical definition of money. And people are considering it not for many things, including holdings as an asset class at the national level, at the sovereign level, as well as in the individual retirement accounts. Can you give us a summary, and not an AI summary, but an Alasdair summary of your writing and your analysis of that?
Yeah. I mean, the story, obviously, with Bitcoin is that it's tomorrow's money or something. The point about my article is that it can't actually be money. A lot of the hodlers assume that you're going to get a complete collapse of fiat currencies. And under those circumstances, then, Bitcoin is going to be useful. But, there are two things that go against that. Firstly, governments don't collapse with their currencies. They may change, but they don't collapse. And their response basically is that as ever any threat from the private sector, they will jump on it. And here we have a private sector currency looking to supplant national currencies, government paper, government credit. They're not going to permit it. And governments, governments will change. Of course they will. But they will basically get more oppressive. And I think the idea that any challenge to them, are they going to jump on it? I mean, we even run this risk with gold. I mean, the difference is that gold is legal tender. It is legally money in all our laws. Bitcoin isn't. So I think that's the first thing. The second thing is that they assume that in this sort of anarchical, this system of complete collapse, there's going to be electricity to continue to for you to be able to charge your phone so that you can use them, if you like, for transactions and all the rest of it. That's not going to happen either. So, hopefully we don't have those conditions, but you can see that as a currency replacing current government credit in the form of their currencies, this actually is impractical from that point of view. The other point I was making is that I think that people who are promoting Bitcoin as the future of money don't actually understand the difference between money and credit. The whole way in which money and credit relate to each other is that you don't actually spend money. That sits in the background. Credit is what you spend. Credit is what is created on demand and is actually used in business and by consumers. Credit in the form of currencies, credit in the form of bank deposits, whatever. All that is credit. You need to tie that credit in terms of its value to money. And that is the whole point that we had in the past about gold standards. The point about a gold standard is that it is something which doesn't fluctuate. in terms of its purchasing power, it is relatively constant over long periods of time. Only if you have that can you have credit which is useful in the economy, credit circulating in the economy, so that businessmen, for example, can work out the profitability of a venture over time, and if they've got to borrow money, they know what they've got to repay in terms of value of what they produce and all the rest of it. Savers know that if they're going to save, that over a period of time, the purchasing power of their savings will be retained. This is the whole point. You don't actually go out and spend gold coins. It is the credit which is tied to it, which actually is the circulating currency, if you like. So that is the important point. Bitcoin cannot do this. Who on earth could possibly take out credit based on Bitcoin for any purpose whatsoever? For the very simple reason that you have no knowledge as to what the value of that is going to be, let's say after a year or 2 years or 3 years of a project. You can't even calculate what the project is going to produce for you. In other words, the idea of Bitcoin is it only works if there is no credit attached to it whatsoever. Then what you're doing is you're collapsing the economy. You're collapsing the economy so that it'll never recover to what we now know. And you're effectively going back to medieval times. It just doesn't work. It's as simple as that. So therefore, what is Bitcoin? Bitcoin is, it's interesting because in my article, I show how it correlates with NASDAQ. And also I found that CNBC does a MAG 7 index. And, it correlates absolutely beautifully with that. When the MAG 7 are up, Bitcoin are up. When the MAG 7 are down, Bitcoin are down. This is, if you like, a tech stock, which, with no trading risk, no business risk at all, but no assets and no profits. It's just a piece of, something in midair. Now, what this means is that if it correlates with, these very, very highly valued tech stocks, when the credit bubble bursts, which it's pretty much in the process of doing. It will be once we get the next rise in interest rates, next rise in bond yields in particular. Whatever the Fed does with the interest rates is a slightly separate thing, but bond yields, when you see the 10-year Treasury going up and beginning to look like it's going to go through the 5% yield level, this is going to kill equities, and it'll particularly kill the high flyers. We found this last time when NASDAQ collapsed. I can't remember whether it was in the year 2000. It certainly collapsed then, but also, I think particularly then. It lost something like 78% of its value after the dot-com bubble. So what's that going to do with Bitcoin? Bitcoin is just, one of these things with, or one of these MAG 7 pretending to be a MAG 7 when it's not actually anything at all. It's just going to evaporate. So anyway, that I think is the conclusion of my researches into it. It's really consistent, if you like, with the madness of crowds sort of thing. Where you get a real previous expansion of credit and matching debt. A lot of this goes into speculation. And this is just so much like previous, bubbles. It really is. And I think there was one company which, at the time of the South Sea bubble, here we're talking about 1720, was floated and actually raised money on the basis that, and its prospectus said that nobody is to know what the company will do. And it raised money on the basis of that. And I remember seeing something similar in the year 2000. We're there this time with Bitcoin. So this is not good news for hodlers And for those who sort of can't really make up their mind whether they should be holding gold or cryptos or whatever. I mean, look, just think it through, for goodness sake. This is, understand it. Understand what money is. It cannot operate as money. It just cannot. If it cannot operate as money, then what is it? It's nothing. It's a volatile bomb. It's going to just go puff.
Alasdair, you write frequently and you publish on your own Substack. We'll put a link to that Substack in the description of this video. Tell people how they can participate.
Thank you. I've been writing on my Substack since I relinquished my position at Gold Money. Really, because I wanted to have, I wanted to educate more people. I mean, Gold Money already had and still has an audience who basically understand why they should hold gold or silver. I wanted to get out to a wider public, and that was the whole point behind setting up my Substack. I'm glad to say it's been really quite successful. You can be a free subscriber or you can be a paying subscriber. The difference is that if you're a paying subscriber, you get a lot more information. Some of that information I believe to be really quite essential if you're really going to understand what's going on with monetary affairs today. So it's there. I would encourage anyone who really wants to protect their wealth. And we're now into a period of wealth preservation, not wealth accumulation. If you want to protect your wealth, then I think sites like my Substack, I think, are vital for anyone wanting to learn how to protect their wealth. And that's what I'm now doing.
Well, we're grateful for your presence here. You always bring a wealth of historically based understanding of precedents that were things we've been through before and how current events may mirror or echo those so that we can evaluate where we're likely going with that perspective and that context. We're grateful for that, Alasdair. And folks, if you don't want to miss a single episode with Alasdair, make sure you're on our free mailing list by going to libertyandfinance.com. Liberty and Finance, all spelled out, all one word, .com. Put in your email address, click submit. Make sure you confirm. On the confirming email, you'll get one email in your inbox per day with all of our interviews of our latest guests, including Alasdair, and any weekly specials, and you won't miss a thing. Alasdair, thank you for joining us again on Liberty and Finance.
That's very much my pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for June 30th to July 6th, 2025, while supplies last. First this week, we feature backdated 1/10 ounce gold maples at just $45 over melt per coin. Next, 1 ounce silver Swiss Pamp rounds are just $2.59 over spot per ounce. 90% mixed junk constitutional silver is only 99 cents over spot. And finally, backdated 1 ounce platinum Platypus coins are just $119 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.